welcome. This is Melissa Armo with the Stock Swoosh, and today I wanted to talk to you about some recession trading strategies. Obviously, everyone is concerned right now about two things, inflation and a recession. So we could talk all day long about whether or not we're in a recession, we're heading into a recession. I think everyone can come to the agreement that we're definitely having high levels of inflation right now. But what does all of this mean for your trading? Well, I think it means that you've really got to be selective about what you decide to take a trade in, whether you go long or short. First of all, you always have to have the direction right when you take a trade. You're going to lose if you don't. In other words, if you go long something that drops, you're going to lose money. If you short something that rallies, you're going to lose money too. So the direction is something important, and obviously timing of that direction counts. And it doesn't matter if you're doing a day trade or an options trade. You got to get the timing right too. So let's take a look at the overall market here today. Today is the first day of August, and August should be a very interesting month for the market because we had a rally to close out the end of July. And it was not what I consider a big rally, but it was a big rally by most people's standards considering the fact that we fell for the first 7 months of the year. So the market's trying to recover. Unless you're very good at reading the market accurately, I think the best thing to do is to just stay clear of the market right now. This is one of these things right now in this type of environment, again, recessionary environment, you've got to try to find something that is going to move that doesn't need the market. Doesn't need the market to rally, doesn't need the market to fall, whatever you want to do. My suggestion here to people is to look for selective plays. Right now it's earnings season. The nice thing is that you have a lot of selective plays during earnings season. So whether you want to do the quick trades or whether you want to hold it for a swing trade or do a little bit, couple day move or a 1 day move at an option, you can get big moves and make money during earnings season, and you don't need to worry about the overall market. Again, right now, I don't think is a time for people to be putting on long-term positions in the market. Why? If you are investing for the long term and you want to buy the market, what if we break and fall lower? And then you get scared and you sell. It's better off to wait till the market flushes itself out and figures out what's going to happen, possibly after the midterm elections, after November and into the at the end of the year, and maybe into the beginning of the next year in 2023. I think it's going to be a choppy rest of the summer, and the fall could be very volatile too. So selective things is the best bet. Now, what do I look at? Just going to take a look at here at this. This is CVX. Again, oil, while it's volatile, has big moves up and big moves down. It can be very profitable if you get the timing right and the direction right, which we did last week in this. So you could have day traded this Friday. This was earnings. What did it do? Stock closed here, gapped up, had a big move. Opened at 156 and change, almost ran up 10 bucks. This is a nice big fat green bar for the stock. You could have bought it, you could have gone long it, you could have done a call as an option, and you could have done it as a day trade, and actually you still could be in this as a swing trade too. Again, I focus on gaps. So what do? I get up in the morning and I look for the gap. Now let's go over what a gap is. A gap is the difference between the close and the open. This closed here at 150.39, boom. So this was Thursday. Friday, then it opened in the morning where? At 156.54. It was a gap up. So it got bought. And then it got bought in the day too. It got bought with institutional money. And actually, this is a stock that is not far off the highs. This is actually stronger than the overall market. Previous high was 182.40. This is less than 20 bucks from there, from Friday's close. And today, it's a little more than 20, but neither here nor there. The stock can move. I mean, look at the rally that the stock had back here. Again, this was in March. Almost went straight up vertical. This was an earnings gap that occurred on Friday, which was really, let me show you over here where this was. Let's get this up here. Look at that beautiful chart. That was 7/29. It was the last trading day of July, was Friday. So here's what happened. This is Thursday, then it was in the morning. So Friday morning, the stock jumped up on the earnings and opened higher. And then it took off like a rocket into the open. So again, my suggestion to people is if you're looking to make money in the market right now, when there's so many things affecting the economy, the news, and a lot of people are scared and they're worried about going long the market long term because of a recession. The fact is, look for selective stocks that you love, that you like. I don't follow fundamentals. I look for gaps to trade. I look for specific gaps that are being bought or sold off to short with institutional money. CVX happened to be one of them. And I point this out because, again, you could have made a lot of money Friday with this. And even if you don't find one of these every single day, I try my best to, and I do most days. Most days, and some days I find a couple of these. We're going to go back and look at some other ones that happened last week besides this. But it's a matter of thinking and getting out of the mindset where you constantly have to be trading or always have to be with the market. The best thing that you could do for yourself is to be picky right now. Picky. And if you're not picky, then chances are you're going to lose. Again, I know people bought the rally. People bought the dip in the market, but it may not last. And then what's going to happen? So you've got to be careful with what you decide to do. And we're going to look at another one here. This was Microsoft. This was last week as well. And this was earnings too. So again, what do? I get up in the morning, I'm looking for the gap. This closed here at 251.90. This opened here at 261.16. Boom. Gapped up on the earnings and rallied and took off. You could have done this as a one-day trade, ran up 12 bucks. You could have done it as a call option. Look where it went. Again, opened after the earnings in the morning at 261 and flew all the way up to 282. This is a nice move for this, and I'm just going to blow it up. This is your roll chart of Microsoft. This is not as strong as CVX, but I will tell you this is actually stronger than the Qs. It's stronger than the overall market here. So again, a quick play with a lot of momentum. Every time I'm looking for a gap to trade, again, whether long or short, I'm just talking about two longs here. These were recent ones. Every time I'm looking for something to do, I want to see something that has the potential to have a big move with momentum. The only way you get a big move in stocks is if they're bought with institutional money. Contrary to what people think about what happened with the Reddit traders, gosh, that was like last year now. It was more than a year ago when all of that scuttlebutt happened with GME. That was a once-off. That was an anomaly. Most of the time, 99.99999% of the time when you're trading, you need institutional money on your side, either buying a stock or shorting or selling a stock to get the move, to get the momentum as one individual trader. And again, it doesn't matter if you do it as an option. It doesn't matter if you do it as a swing trade. It's about finding that golden nugget. And I call it the golden gap. That's what I coined my strategy, because I rate the gap based on the daily chart. This was Microsoft, and I rated per my 26-point system to determine the best one to do. So that one I did. Now, I did not do Amazon. Let's take a look at what that did. I did not do this. I wasn't crazy about the gap. Let me just see where this went. This had earnings last week too. And I didn't look at this yet today. Again, most of the things that would affect the market earnings-wise, even though we have another month of earnings season, are out, reported, done. So whatever happens between now and Labor Day is going to be based on whatever moves the market has, is going to be based on news or whatever. Yeah. Oh, wow. I didn't do it. Yeah. I'm glad I didn't do it, because to be honest with you, I mean, you would have had to get in and out of this lickety split. Let me just see how this set up. Ugh. Yeah. I mean, you can watch this if you want. I did not do that. And again, this didn't rate high per my system. Didn't do it. See the difference between this? That's a good example. And that. It's like night and day. And even this and the first one, CVX, big fat green bar, you know. So you can see the difference here. Now let me find one that we did that was a short. Just gonna look for a recent short here. Yeah, let me see if I can find a better example. There's a couple of them here. I'm just trying to find some recent things. Look at IBM. So what can you do during this time? Volatility, inflation, recession. Don't hang around long either. Take your profits. So you take a trade, you're up, chunk it out, get out. Don't hang around long. Don't waste your bullets. Don't give back, you know, don't try to make 50 cents and then give back $1 profit. Do you know what I'm saying? Book the money when you take trades when you're up. Things can flip on a dime. And don't be surprised if that happens in the market either, like I said. We closed today for the market, by the way. Let's look at this IBM. Yeah, this is a good example, because we had the follow through here. So let's look at this one. Oh, you know what? Verizon. I can pull that up too. So this closed here. This was a gap down, 138.13, boom. Open down here, 131.58. We shorted this. Also, did a put, got the drop. Where did this fall all the way down here? 125 was the dream target. It did take 3 days to go there, but it did. Again, you would have done a put in this on this day, got the drop, would have done a day trade short in here, got the drop, could have day traded here, could have day traded here. This was a nice short. Again, I'm looking for selling for institutional money to come in and sell it or short it. And you had that there in the drop. Looking at this here, this rally back and is still holding the resistance pretty nicely, even with the rally in the market. And I highly doubt that would have rallied for the last 4 days if it hadn't been for the market actually rallying too. But this was an earnings trade as well. I rated it. It rated to short. Some people went long it because it gapped down here on the 200 period moving average. That trade would have lost. So again, pick selective things. Pick things that move. In this particular day, you can see basically a $5 drop. That's enough for you to make money. Get in, get out. Get in, get out. Or if you're doing it as an option, you better get out here, here, or here. You want to make sure that you are booking money and fast trades. Again, I'm not doing longer term things. I'm not doing long-term options like leaps. And again, what's the point of doing long-term stuff right now? I mean, even if you picked, I'm going to go back to this because this is just so strong. Even if you picked one of the strongest charts in the market right now, which really is CVX, again, the oil stocks have just been flying this year. We're going to look at Exxon next. You could say, well, I'm going to go long this for a long-term trade out, or a long-term option or something out to maybe January 2023. You might suffer a world of pain until it gets to the numbers that you want. Say your targets, you're like, okay, 200 or something. $40 is nothing for this stock. Again, back in here, it ran up in a week like that. But what if it doesn't? What if something happens? We're in a 24-hour news cycle right now. You know, this is the way the world is. This could fall all the way down to 130 before it goes anywhere near the highs. You have to be extremely, extremely, extremely careful right now doing things for long term. And by careful, I mean patient. You're better off during this recessionary environment, and this is the point of this lecture here today, doing faster trades, booking money, chunking it out. And if you want to hold a small piece of something, let's look at Exxon. If you want to hold a small piece of something for a longer term trade, I don't have a problem with that. But when you hold an entire position, let it be up in it, say for example, take it, be up a good amount of money, and then let the whole thing turn around against you and lose, that's crazy town. And that is not only debilitating for your account, for your trading account, it's also actually debilitating for you emotionally and mentally, because you're gonna beat yourself up for doing something so stupid, quite frankly. And I think right now with the rally that the market's had just in the last week, you can bet your life on it that there are people that are long the market that really think that it's hit the low for the year, that it's going to rally all the way back up to the highs and go over it, and they're not selling out of the position even with the drop off into the close today. Now, while we could do that, theoretically we might, maybe we will. There's low ads that happens, and there's nothing at all in the chart indicating that in fact that will happen, at least not right now based on the gaps that I'm reading and rating in the chart, and that is bullish and bearish. I look at bullish and bearish gaps, as we're talking about in here. I prefer to short though. I do prefer to short. I prefer to short all day long. Short moves happen fast and quick and big, but when the bullish gaps are there for the setups, we do them, and this was one of them too that we did. This was last week too. This was earnings. This is actually, just looking at here, this is a better chart than CBX. Yep. Look at that. So we almost got to 100. We almost got there on Friday. So let's take a look at the gap. Closed here the night before at 92.64, opened at 94.45 and flew up, ran up to 97.50, almost got to 100. Again, a beautiful, beautiful, beautiful long that you could have done as a day trade, and you could have done it as a call, and you could even be this as a swing trade. Again, you have to have targets for things where you're getting in and you're getting out. But this is a very strong chart. So again, this is what I would look at when you are looking to make money right now and looking to trade. For me personally, I teach a system, I teach a class once a month where I teach my strategy on gaps, how I make the picks. Everything I just told you about here were all my picks for these particular days, and I made the picks based on my rating system. If you want to learn it, You can sign up for my class and take it once a month. As far as what people should be doing, they should be doing selective things. They shouldn't be worrying about the overall market right now. It's very tricky to do. You're probably going to get burned if you're trading the market right now, unless you're an expert at reading the market. And I'm really good at reading the market. I'm an expert, but sometimes I don't get it right. But I got to be honest with you. Right now, the plays to do are the earnings plays and the stocks that are moving big, whether they're up or down. That's where the money is to be made, and the money is to be made quick. And the other thing is people need to take profits, and they need to take profits pretty fast right now so that they can make sure that they book the money. And if you want to do that forever, you can do it. Again, you can hold a portion of a position for a longer term move if you have enough time left in something like an option, for example. Take it on a Monday, has a move up, want to get out half or 75%, hold a little bit, see if it goes. If you've got the market with you, you might get it up. But if you don't, you might lose in it. And so that's the other problem. What you don't want to do, let's take a look here at Apple, one more here. What you don't want to do is to disregard the continued volatility that we will in fact see. And I think that people have gotten so used to, just drop off here, these rallies continuing. I mean, I'm talking about 2020, 2021. People have a very short memory. They made money rallying on rallies and buying dips in 2020 and 2021. They really want this to continue, and it may not. So pick selective things to do. Look at Tesla. This fell today. Let's look at Twitter quick. Tesla, or Musk did a countersuit to Twitter Friday, and this fell slightly today, but so did Tesla. Anyways, if you have any questions, if you'd like more information, email me at melissa@stockswoosh.com. Have a great day, everybody. Have a great month of August, and good luck.